Never a dull moment is there in the crypto world. Welcome to Forkast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. It's where we look beyond just the headlines to get you the insights and knowledge that will help power smarter decisions. I'm Forkast Megha Chaddah. And the crypto crackdown in the world's largest economy, the United States, is still the biggest developing story this week. On Monday, Binance US urged a federal judge to deny the SEC's motion to freeze its assets. In a court filing, the exchange said it could see its operations quickly grind to a halt if a court rules in favor of the SEC's request. Binance US also reiterated in the filing that its customer assets are, quote, secure, appropriately segregated, and available to customers. According to reports, Binance US and SEC are negotiating a compromise that would avoid a total freeze of the exchange's operations. On Wednesday, the judge hearing the case said that if the two sides are able to strike a deal, there wouldn't be any need for a restraining order requested by SEC. Last week, the SEC sued Binance US, and its CEO Changpeng Zhao over alleged securities violations. Some cryptocurrency tokens, including Cardano, Polygon, and Solana, were listed as unregistered securities by the SEC. Will it have a spillover effect to other jurisdictions? We asked Dominic Longman, Senior Executive Officer of Binance Abu Dhabi.
These different regulators have had their own proposition for a number of years now. So, I look to them and their definition of what tokens they believe are, and therefore which ones I'm allowed to custody. Hopefully the SEC and CFTC and the outcome, I think all the industry want is some clarity. The industry may not necessarily agree with how they're going about it with others, but it's coming.
Also on Monday, 2 US lawmakers filed the SEC Stabilization Act, which seeks to restructure the country's Securities and Exchange Commission and remove Gary Gensler as its chairman. In a tweet, US Representative Warren Davidson said, quote, I'm introducing legislation to fix the ongoing abuse of power and ensure protection that is in the best interest of the market for years to come. The bill's co-author, US Representative Tom Emmer, said, quote, the act will make common sense changes to ensure that the SEC's priorities are with the investors they are charged to protect and not the whims of its reckless chair. Gensler and the SEC have not commented. As US regulators continue to bear down on crypto, a Hong Kong legislator, on the other hand, is encouraging global crypto exchanges to set up operations in the city. In a tweet, Johnny Eng of Hong Kong's Legislative Council said he welcomes global virtual asset trading platform operators or crypto exchanges, including Coinbase, to expand to China's special administrative region. Coinbase was also sued by the SEC last week for allegedly breaching securities rules. Meanwhile, Hong Kong rolled out a new licensing regime for crypto retail trading on June 1st. Our editor-in-chief Angie Lau caught up with Sean Lee of Odyssey Network to find out what exactly is it that gives Hong Kong that extra edge in the crypto world. Over to you, Angie.
Thank you so much, Megha. So I want to share with the audience who's watching what is happening in Hong Kong right now. There is such a buzz. It's so different than the US, even Europe a little bit, but certainly Asia is a very special place that's really feeling very different these days.
Yeah, I think there's a very special buzz for two primary reasons. One is obviously we all know what's happening in the US, right? The vibe, the frustration, and the flight that are happening with US projects and also US capital is very evident. So that is for sure, and that obviously attracts a lot of attention to Hong Kong. So I'm sure you and I keeps getting phone calls and interviews, like everyone's like, what is going on? Is this a flash in the pan?
Yeah.
Is China gonna come in and squash this thing? And how is Hong Kong gonna compete with Singapore and Dubai and all of that? And I keep telling people, this is for real.
Yep.
There is a lot of activities. There's a lot of, more importantly, execution. It isn't just talking anymore. And I think that part is the most important?
It's the ecosystem effect. So if you think about it, Hong Kong as being one of the financial capitals of the world for a very long time. So traditional finance folks are here. The talent is here. And don't forget, access to capital is also here. The venture capital that is here, the investor dollars, are very robust, and they're looking to propagate in Web3. Because the third layer of this ecosystem is the emerging markets' desire to leapfrog and participate in Web3. This technology actually allows a lot more people to participate in ways that they had not before.
So think about it this way, right? 70% of the world population lives in Asia. Much of that population is now entering, or perhaps even surpassing, the middle income range. Right? So there's a lot more need for financial services. But the existing banks, based on a variety of different reasons, may not offer them to those audiences. So that is one very important aspect. The other aspect is, you and I talked about this before, right? People keep forgetting that the Hong Kong dollar is pegged to the US dollar.
That's right.
Right?
That's
so
right.
We have one foot obviously connected to China, and through our currency connected to the largest economy in the world still. So now we've got both sides. That is drastically different than anywhere else in the world.
All of a sudden, the US dollar becomes a unit of currency and not as a base currency that needs to be owned before it's used. That's a very different business proposition for another conversation. It's just remarkable to me how much passion and building there is, of which you're doing. You're an international guy. We are an international firm. But to be able to bring this perspective back to a global audience, I think it's one of the most important things that, and I thank you for doing it as well.
Enthusiasm is what drives hope. And with hope, now you can actually have a chance to actually get something phenomenal. That's how we look at it.
Things are happening here. We continue to cover the space. Megha, back to you.
In other news, XRP token, which powers Ripple Labs payments, saw some wild swings this week. XRP prices jumped sharply on Tuesday in anticipation of the release of hundreds of internal SEC documents in the lawsuit against Ripple. Ripple earlier claimed the documents could prove the regulator had unfairly targeted the company with a lawsuit. In December 2020, the SEC filed a lawsuit against Ripple, alleging that its sale of XRP was an unregistered securities offering. And a speech given by former SEC Director William Hinman in June 2018, where he said sales of Ether cryptocurrency were not securities transactions, became a major point of argument in the case as Ripple sought to bolster its fair notice defense. The SEC had sought to keep the documents sealed, but a New York judge ruled in May the documents should be made public. On that note, it's time for a quick break, but we will check in on the NFT markets when we return.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
Thanks for staying on with Forkast IQ. Well, it's been yet another rough week for the markets as selling pressure holds strong. Crypto market capitalization is holding just above the $1 trillion mark, even as money flows out of digital asset investment products for an 8th straight week. Bring in some expert views then. Ben Roth of Auros joins us to talk about the big trends. Ben, so good to have you with us today. And what a week it was. US regulators are on a warpath against major crypto exchanges. Are there any liquidity concerns that you're spotting?
Liquidity has been gradually kind of decreasing all year. Volumes are down probably 30 to 40% from last year, and which itself was 30 or 40% below 2021. So since the highs of 21, volumes and liquidity in general are down about 85%. I don't think we necessarily saw a pickup of that in the last week with these big SEC complaints, but it's just a continuation of an existing trend.
Now, expectedly, US-based crypto exchanges are seeing some massive outflows because of all these lawsuits. Where is all the money moving to?
Some of it is going to offshore exchanges, but I'd say in general the offshore exchanges are there's a few that have had some increased counterparty risk scares, I'd say, in the past month or two. I'd say the biggest recipient is just going into cold storage. There is a significant amount more crypto in cold storage vis-a-vis exchanges than there was, say, 3 to 6 months ago. There's some offshore exchanges that have seen some smaller tier 2s, perhaps, that have seen increased inflows, but anything that was let's say a tier 3 has seen outflows as well because of increased counterparty kind of concerns.
Well, Bitcoin's had a rough week. It's just about holding on to the $25,000 level, with Bitcoin halving due to happen sometime next year. What's your take on this event becoming a market mover?
I'd say there's really 4 determinants, right, as to where Bitcoin and crypto in general, but particularly Bitcoin, is going to go over the next, say 6 to 12 months. The halving is one. We've seen, just historically, it has been a positive event leading into and out of a halving. I'd say this one might be slightly different to the last two, particularly the last one, insofar as you've had some macro headwinds and some regulatory headwinds and some political headwinds that you've been up against. But I'd say the biggest impacts for Bitcoin in the coming 12 months will probably be macro, political, and regulatory, with that halving potential positive catalyst there if the others fall into line.
Ben, let's move away from Bitcoin and take a look at some of the old coins, and a bunch of them are seeing projects being built around them. The SEC, though, has declared a handful of them as securities instead of commodities. Should we expect any short-term downward pressure from that development?
I think we've already seen short-term downward pressure, and we're seeing it every day. A lot of these altcoins are down 30 to 50% in the space of a few weeks, and that is with Bitcoin and Ethereum kind of down 10%. So you're seeing a divergence between the large caps and the small caps already, especially, and broadly small caps, not just those that have been named by the SEC within their complaints, but actually, the broad kind of small cap group of tokens is seeing a big downward kind of pressure over the past few weeks, and especially in the past week. We've seen this before. The winds are going to shift, and at some point the market will become interested in something else, and they'll kind of put to the side, these regulatory concerns, in the same way that all people were concerned about a year ago, or a year and a bit ago, was the war in Europe and the impact on supply chains and how that would feed through to inflation.
Thanks for joining in, Ben. Well, let's shift gears then and focus in on NFT markets, which have had quite the action-packed week. Yehudah of Forkast Labs data analyst is here with all the NFT market moves he's spotted.
Well, the NFT markets are reacting strongly to the uncertainty from the SEC's lawsuits against Binance and Coinbase. And just this week, the Forkast 500 NFT index hit an all-time low, dropping under 3,000 points. Many expect a long road to an NFT recovery, perhaps extending out for years. That's not to say the market won't have periods of being green, as the saying goes, we're early. Highlighting just how early we are two major upgrades to some of the biggest platforms that offer NFTs. First is Bitcoin's ordinals, which are getting a buff with a new upgrade called Recursive. The new upgrade allows inscriptions to now reference other inscriptions, letting you link ordinals that can contain code. So this effectively eliminates the 4 megabyte size limit and opens up infinite possibilities on the Bitcoin blockchain. What can be done with this new tech upgrade? Well, now that code can be stored directly on chain, well, you can store video games on chain. And generative art now has the flexibility it needs to flourish. And applications could maybe be stored and run on chain. And there's likely many more use cases that really haven't been dreamed up yet. But when you consider that mainnet Bitcoin NFTs didn't exist prior to 5 months ago, 2 things become clear. 1, Bitcoin NFTs are still very young, but 2, the pace of Bitcoin NFTs it feels eerily similar to the way Ethereum NFTs grew in 2021 and 2022. It's very, very exciting to watch. The Polygon blockchain is also unveiling an upgrade to its ecosystem, and it's called Polygon 2.0. Polygon 2.0 is being described as a blueprint to build the ultimate value layer for the internet. Details will be revealed over the next few weeks, but there's already exciting talk about some major changes. And this includes new utility for the Polygon native token Matic, changes to the governance, and even updates to the protocol's architecture. With 2.0, Polygon is aiming to bring unlimited scalability and unified liquidity. The NFT's art scene seems to be quite resilient to general market conditions, and on the week of Tyler Hobbs Fidenza's 2-year anniversary, we're seeing massive sales roll in again. This week, Fidenza number 158 sold for over $370,000, and Fidenza number 25, that sold for $129,000. Speaking of art, NFT artist Fuocious is bringing his high-end Christie's and Sotheby's art now to your feet. Fuocious is partnering with Adidas to launch new custom sneakers that will arrive both as an NFT and as limited edition physical shoes. Adidas NFT holders and Fuocious NFT holders, they'll have first dibs at the exclusive shoes, followed by select partner communities, and finally, it opens to the public on June 22nd. So when you have big names that collide with big brands, you can expect a big hit, and this is one of those NFT drops that it'll be hot regardless of what the overall market looks like. And finally, the Pudgy Penguin CEO, Luca Netz, well, he announced plans to release a decentralized NFT IP licensing platform called Overpass. That's coming this July. Overpass will allow NFT holders to secure licensing deals on this decentralized platform, all with a few clicks of the mouse. Luca's motivation for simplifying the license process stems from firsthand experience. Many people believe royalties are one of the core features of NFTs. According to Luca, it's one of the few ways to drive value to holders aside from the floor price. Luca stated that he aims to have the NFT project with the highest floor price and also will become the face of NFTs. Well, Pudgy Penguins currently have a floor price of 4 ETH, but considering that Pudgy Penguins were almost worthless when Luca bought them, well, it's safe to say he may be well on his way to delivering on that goal. There's a lot more evolving stories across NFTs and the blockchain right now, so I'll get back to digging so I can bring you all of the latest happenings again next week. Back to you.
Yehudah, thanks so much for that. Well, let's take a quick break then and focus in on what's happening in the Metaverse on the other side.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast.News.
Good to have you back with us on Forkast IQ. Now, an online immersive virtual world, that's what a metaverse is often described as. And it's a world that could be worth as much as $5 trillion by 2023, according to consulting firm McKinsey. Asia now has always been the leader when it comes to exploring and developing the latest technologies. South Korea, China, Japan, the region's 3 industrial powerhouses have taken their economic rivalry to the virtual world. But who will emerge the winner? Forkast's Danny Park finds out.
Last year, the previous South Korean government of President Moon Jae-in announced a $46 billion digital New Deal to invest in the digital future of the country. The plan, spread over multiple years, was expected to create almost 1 million jobs by 2025. And a small portion of the investment, about $170 million, was earmarked for the metaverse. The digital New Deal at first spurred metaverse fever nationwide. Leading consumer companies like Samsung and Naver set up collaborative projects with players in the virtual reality sector. And K-pop stars flocked to this new tech. Blackpink held a virtual fan meeting event on local South Korean metaverse Zepeto, while another popular K-pop act, aespa, called themselves a metaverse girl band. Each of the 4 members have their own virtual avatar counterparts. Local governments also began to explore the use of metaverse technologies for public services. But despite the initial excitement, the public remained unconvinced. One government-linked survey in April this year found that only 4% of the population engaged with metaverse services in 2022. South Korean metaverse expert Park Hye-jin says that in order for a South Korean metaverse project to prove successful domestically, it has to ensure that you virtually get everything you enjoy in the physical world. Interestingly, in contrast to Metaverse projects in other parts of the world, South Korea's current Metaverse platforms are built on existing internet backbone and not decentralized blockchain technology. Meanwhile, local legislators are debating whether Metaverse should be classified as a form of online game. Putting the technology under this category could severely hurt its growth as stringent rules are applied to video games, including an outright ban on those based on blockchain technology. On the flip side, there's growing concerns, not just in South Korea but elsewhere in the region as well, about the behavioral impact of living a virtual life. A 2019 Cabinet Office survey in Japan estimated over 600,000 were living as hikikomori, described as someone suffering from extreme social withdrawal. Despite societal concerns, Metaverse development is increasingly viewed by Japanese policymakers as a way to tackle some of the nation's biggest socio-economic problems. The Japanese government has made Metaverse development a central feature of its ongoing digital transformation drive. Keisuke Toyoda, an advisor to Expo 2025 in Osaka, says lack of adequate funding and consensus on how to direct resources is hindering Metaverse development.
It's really difficult to trigger this kind of investment for the private sector. That we've been developing this concept among the 20 or over 20 corporate groups, including the big companies like Hitachi, Takenaka, and Daiwa House and stuff. No one wants to be a first hanging. So we need the push from the government, but government doesn't have money to develop and invest by themselves.
In February this year, 10 leading Japanese companies, including Mitsubishi and Fujitsu, announced a Japan-specific metaverse project called Ryugo Koku. And some are hoping cyber-physical connections, made a reality by Metaverse, could help provide Japanese people a tool to balance rigid social commitments with personal needs. It's also hoped Metaverse could also encourage those affected by extreme social withdrawal or hikikomori to re-enter society as active members of the virtual job market. Over in China, Metaverse was designated as a national strategy in October last year. Dozens of cities and provinces, including Beijing, Shanghai, and Hangzhou, have released plans and policies to adopt Metaverse in the real-world industries. Last month, Beijing launched China's first Metaverse patent pool, allowing enterprises and academic institutions to cross-license technologies related to the emerging sector. It's all a part of the Chinese capital's ambition to introduce over 100 Metaverse enterprises by the end of 2024. And it seems China's interest in the Metaverse is more practical than those seen elsewhere. In January, Shanghai unveiled 20 Metaverse use cases it plans to build by the end of 2025. Now, China's restrictions on cryptocurrency mining and trading is shaping how virtual reality platforms can develop in the country. Deng Jianpeng of the Central University of Finance and Economics in Beijing said, "The Chinese government has been trying to promote a blockchain ecosystem without cryptocurrencies, making public blockchains hard to promote. Even as China pushes ahead with development of Web3 and the Metaverse, the country's tech giants like Tencent and Baidu appear to be paring down their position on this virtual reality. As Asia's Metaverse gathers steam, which country will emerge as the winner? That's something only time will tell." In Seoul, South Korea, I'm Danny Park.
And speaking of the Metaverse, Forkast Labs, the parent company of Forkast.News, joins forces with Animoca Brands, the Sandbox. The global partnership will produce the first ever set of indexes to track the economic activity in the Sandbox metaverse and provide real-time measurements of digital assets performance. The indexes will allow the Sandbox's 400 plus brand partners such as the Warner Music Group, Ubisoft and Gucci Vault to track how their metaverse assets are performing in real time. As Hong Kong throws open the gates to retail crypto trading, China seems to be welcoming the move. What does it mean for investor protection? How is Hong Kong placed as a digital assets hub? Find all about it in the latest episode of Word on the Block that airs Monday, where Forkast editor-in-chief Angie Lau sits down with Neil Tan, chairman of FinTech Association of Hong Kong. Don't forget to tune in.
Yeah, absolutely. I think if we look at the tea leaves, if you will, actually what's happening in the other jurisdictions is a pullback in terms of the retail investor access. and Hong Kong is actually going headfirst into this area. Of course, there's investor protection and overarching inside of the new regulatory framework, but the fact that we are actively going into this area is a telltale sign of where the future lies for Hong Kong as it goes after its ambition as a virtual asset hub.
Well, that's a wrap on this week's show. Thanks so much for tuning in. Remember to like and subscribe to this video if you're watching us online. Stay tuned right here on this channel if you're watching from home. It's easy to stay connected with Forkast for the latest developments in the world of crypto and Web3. I'm Forkast Megha Chaddah. Join us again this time next week as we bring you the latest from the world of Web3 and all that matters. Forkast IQ, get intelligent in Web3.